Um, but anyway, so another thing that I want to talk about was regarding the home itself. And let's just say you have your eyes on this home and you think it's bringing in, we determine it's going to bring in $2,000 a month. Again, I'm just using this as an example. $2,000 a month. Um, the appraiser goes out there and the home value looks great, comes back as, as what we thought, but he determines that the market rent is lower than what we anticipated. Now, sometimes this becomes a problem, and sometimes it's not so much of a problem because there are lenders that will offer different ways to do this. Now, this would be called a low ratio loan. So let's just say the rent we thought was 2,000. Um, the mortgage is 2,000, including your tax insurance, uh, your principal, interest, tax, and insurance, and also the HOA. Let's just say it's just at 2,000, but the market rent comes in at 1,800, right? So what we're gonna do is we're gonna take 1,800 divided by 2,000, right? Wait, 1,800 divided by 2,000, and we see that that's obviously just below. It's about a 0.9% ratio. So now we're what's called a low ratio. Um, some lenders are not cool with this. They'll deny the loan. And the good thing about working with someone like me, a broker who has access to over 200 lenders, is we can always move it if we have to a different lender. However, a lot of these lenders understand the market and will have low ratio DSCR loans. Now, the only caveat to that is the interest rate is going to come up because it's a riskier loan, it's a low ratio. So as long as I always prepare my borrowers when I'm talking about this stuff, like, hey, this is where we think the rent's going to be. Now, for some reason, the appraiser can go out there and tell us that the rent is lower than what we thought, and therefore it becomes a low ratio loan, and we'll have to, there'll be a rate adjustment, there'll be a cost adjustment on that, so we need to be prepared for that. So as long as as long as I set expectations, um, I actually haven't had that happen in a very long time because I'm normally pretty good with determining the market rent, and I always go conservative anyway. Typically, what I'll do is I'll go conservative on the market rent. I'll ask around. We'll ask the realtor. We'll make sure that we're borderline, where we need to be, and then I'll estimate high on taxes and I'll estimate high on insurance just to be safe. Not taxes. I'm sorry. I'll estimate high on insurance, and I already know what the taxes are because it's a public record. And then we'll look at the HOA if there is any. But if it comes in low, you just got to expect the ratio to come up a little bit, or the rate to come up a little bit.